Good evening, everyone. So let's look at daily bias. In order to understand daily bias, there are a few building blocks you need to understand in order to unlock the potential direction for the next few days or weeks. So let's look at the simple swing points at first. So the swing high is basically a high that has two lower highs on either side that would classify this as a swing high. Now, since the price is fractal, this happens in all time frames. In order to understand daily bias, we're going to be focused on the daily time frame. So on the other side, we have a swing low, right? A swing low is a candle that closes and has a higher low on either sides that would classify this as a swing low. Important to understand that color of the candle does not matter. I mean, if it's bullish or bearish, that has nothing to do with the swing high or the swing low. Understand? So this is the first building block. The second building block is we need to understand the liquidity sweeps or the liquidity grabs. So in this example here, you see that we have a high here, which is a swing high, right? And price came up, took out the swing high and left a wick. Now this wick is not too important, but we need to understand that we have swept the buy side liquidity that's resting above this high. On the other side, if you look at the swing low here, which is the two higher lows, this makes it a swing low. Price came down, swept these lows. The close itself does not quite matter at this point, but just to understand the liquidity grabs, the sell stops here are now weighted. The price has grabbed those. So this is a sweep on sell side liquidity. We would dive deeper once we understand these building blocks here. Now, once we know that, okay, we have a buy side and sell side grabs, now what happens after? We have the seeking equilibrium post sweep. Now this is in terms of buy side here. So as you remember from the previous example, we have the swing high, this was rated, price left a wick, right? And then the next day we look for going inside this range. So this is the high and this is the low. If you do the projection here for the Fibonacci, the 50% would come up about here. This is an eyeball, this is not an exact level, but if you look at the range here, this should be about like 50% of this range. So this is what we expect price to do after the liquidity has been swept and the price to seek equilibrium. So this gives us a potential bias going into the next few days or weeks. So let's look at another example from the opposing side. So if you see here the swing low that was rated, and from this high to this low, the equilibrium is about this point here, and then price seek equilibrium after the low has been rated. So you have a potential direction here going to take these lows out, and then an opposing side to fill the equilibrium. So you understand that, okay, we have a swing high, swing low, we have the liquidity sweeps, and then the price after the liquidity sweeps are expected, or rather is expected, to trade inside the range from this high to this low. And if you understand ICT more, you can go a little bit more deeper in the fair value gaps and the order block, the mean threshold, but that's not important. What is important that you understand that after the sweep, we tend to gravitate inside the equilibrium points. Now let's look at this live example, and then I would go to the actual chart to show you how this looks in real time. So if you see here, we have the swing high, we have a few swing highs here as well. So this is where the price started to run lower. Then what happened, we came higher, took out the swing high here. Now this is a sweep on buy sides. This is the swing high as well. And then once we swept the highs, we left the swing high. Now what happened after was we traded lower to what? To the equilibrium point. Now again, I said if you understand ICT, you would see this as a fair value gap. You see this as an order block, the mean threshold and all that business. But for now, I'm just going to keep this real simple for any beginner to understand how to come up on the daily bias by their own. So once the liquidity was swept, what happens after? We tend to gravitate towards the 50% here. And this is a discount basically, so we can expect price to go a little bit more deeper. Now let's look at Euro USD real-time chart to understand this more in depth. All right, let's look at this in the real time. This is a recent Euro USD chart on daily time frame here. So right off the gate, if you note, what is that? A swing high here. What did price do? Price came higher all the way to take out the swing high. So this is your swing high. What did we leave after? We left a swing high here as well. So once the price was swept here, now understand that this is also a direction that you're looking for. This would also give you a daily bias going in for looking to sweep these highs. Now what happens once we sweep these highs? We tend to gravitate to what? Now 50% of the range. So if I were to pull, so you see this low here, this is a swing low again. And if you pull your Fibonacci, if you want to have a settings here, you could look at it here. I have 0, 1 and 0.5. I would use a different color just to make it clear. So if you see here, we have a swing high and a swing low. What happens after we trade? We came lower, equilibrium, and discount. So below discount we have what? Fair value gap, if you want to be more precise in this example. And what do we have with the fair value gap? An order block, an open, and a high. So if you see here, after the swap, the daily bias would be what? Bearish, going into what? The equilibrium point and discount. What discounts do we have? We have the fair value gap over here, and we have the order block, which we was tabbed beautifully. And then what happened? We resumed higher to what? To the swing high. The same thing here. We went higher to take this out. Now let's look at the projected highness here. So what happens after is we take this high out and we kept pressing higher. Now if you do have another swing high on the left, maybe on weekly, on daily, you could see here that okay, we have this swing high here as well. So that is also a liquidity resting there. So this would be a sweep on the highs, which we kept pressing higher and we delivered at least until this high. Now what happens after this high was delivered? We left a swing high, right? So if you leave a swing high right here, so this candle confirmed that this is a swing high on 2nd of July 25, and from 3rd of July we are looking here to this low. If you project this to this high, where's your 50%, which is right here? And what is it inside the 50%? You have what? Discounts, and in discount you have what? The fair value gap here. But if you only look till 50% and discount, you still have the beautiful days looking to go lower. Now I'm gonna go deeper on this fractal here, but for now just understand that the high was taken out, we left a swing high here, right? And from there on, the magnet for the price was the 50% of this range, and we dug deeper inside the discount. Now if you look closely, we have a beautiful level here, which is what? An order block, which was tabbed beautifully here with literally I think 2 pips here, maybe 4 pips something, and then we started the grind higher again. Now you need to understand that once the swing high has been left in price and we have not yet delivered the 50% off, we would definitely gravitate towards these levels. Then what happens? We trade higher. These swing highs have been taken out, but I personally would be looking for this high, right, which it did not quite get to, and this day we traded all the way lower. Now again, you have to do the same thing, looking for liquidity points. The swing low here, and what do we have? Swing low here. What did price do? Keep gravitating towards the swing low. Okay, then we know that price did not really want to take these highs out. We left what? A swing high here. Now once the swing high has been left out after the liquidity trade, even this, if you see here, what does price wants to do? 50%. And what is this below? Fair value gap here, order block. What did price do? Taken everything out here, showing that willingness to trade even lower. Now after that, what do we have? This swing low, we have these swing lows here, so the price did gravitate towards those swing lows. Now what happens after the price swept these lows here? We left a swing low again. Now once we have taken this out, let me just take this out, it's more messy over here. What happens after? Once these lows have been taken out and we left a swing low, we do the same projection, high to low. Now what do we have here? 50%. What do we have? Fair value gap here, and we have the order block here, and price did what? Keep gravitating towards these levels. Let's see what happened, what really happened on the lower time frame here. So just to give you a more basis on like how you could have actually used this information on the lower time frames here. So let's suppose we took here, we take out this high, so we left this what? A swing high. We know that okay, once the swing high has been left in price after the liquidity has been raided, here as well, the same thing we did here, boom, and then we came what? To the order block, taken out, came what? To the order block, went higher, didn't quite take out, went lower, took out all these liquidities here, went higher again to what? 50% and premium. So you see the rhythm that price has. It's actually beautiful when you start practicing it. Okay, let's see what actually happened here. So once we know that okay, the 2nd of July has left this swing high in place on daily chart, I'm looking with the projections on these lows to high to seeing where the 50% is and seeing where the discount is. So from 3 July, I'm looking what? For price to trade lower. So if I go to hourly, and if I actually look at this ranges here, what do we really see in this price? So from here on, I know, okay, we have left the swing high on daily. Let me just do that. Yeah, let me just zoom it a bit. Now this is 50% of the range we had on daily, and this is discount. And if you look at the order block, look at how precise this is. I would like to know how many pips this was really. Not even 3 pips. Beautiful here. So now from here on, all you're looking for either the same thing, swing high taken out, and you could take this as a sell here. The same thing here. Look at the swing high taken out. We know the market is likely to trade lower, so any swing high is a liquidity grab again for the longer time frame target to look for these lows. Again, the same thing here. Anytime market takes out these highs, we tend to do what? Sell off aggressively. Again, these highs, aggressive sell. These highs here, didn't quite get it, and then aggressive sell. And if you actually look a little bit more deeper, you will also see a fair value gap, which was used for price to rebalance, get in for smart money, and then boom, sold off to these lows here. The same thing here, didn't quite get to the fair value gap here, which was used here, but then you understand the premise here, that is liquidity grab and then sell off. Now look at the beautiful range you would have, understanding the swing highs, the liquidity grabs on daily, and then going towards the equilibrium point of the range. We have beautiful sell here, and here we have beautiful sell again on this side. Again the liquidity sweep sell, again this liquidity sweep sell. Didn't quite get it here. I don't know if this did. No, it did not. Okay. And then what happened? We delivered right to the 50% and went deeper to what? To the order block here. Now this could have been a news. I think this was a FOMC if I'm not wrong. But you understand how the rhythm of price is once you understand how the daily is going to project these ranges. So hopefully this helped. This is, I wouldn't say this is too advanced. This is still a beginner level. If you want to get really deep into it, you might have to keep studying it and getting the old data and just keep practicing it. Understanding the swing highs and swing lows, and understanding how the liquidity is resting above and below them. And once that is weighted out, we potentially go into the range. If you even look here on lower time frames, you will see the same rhythm going on. This is a swing high. This is a swing low. We take this low out. Then what did we do here? From high to low, we went inside the 50% premium here and order block. Tabbed it here. You see over here. This was a level used, and then boom, we went lower. What happens again? This is a low here. We take this low out. From high to low, where did we go? 50%. We went higher toward the fair value gap, sold off. Again, what happened? Swing low, swept it. Then what happened? We have the swing high to that swing low. Price went higher toward the fair value gap, sold off. You see the rhythm here. It's amazing once you understand how this works. Again, we took this low out from high to this low. 50% here. Took out this high, didn't quite get inside the fair value gap, sold off. Until what? Until we hit the higher time frame level, which is the 50% here, and then the order block on daily time frame. So you see how beautiful these things are. If you keep practicing it, you will understand how to work inside a day and how these ranges are being projected, and it would unlock a lot of things that you might be having trouble understanding right now. Hopefully this helped. I'll come back with more videos in order for you to really understand these things and hopefully be profitable.